The world didn't realize it at the time, but a single decision, made behind closed doors in Washington and Brussels, triggered the most profound shift in global financial power since World War II. A decision that was intended to cripple Russia instead detonated the foundation of American economic dominance. And now, just a few years later, the consequences are unavoidable. The dollar's collapse has already begun, and there is no going back. To understand how we reached this moment, we need to return to a turning point that the world witnessed but didn't fully comprehend the moment Western governments cut Russia off from the STBIFT network. It was sold to the public as a masterstroke of economic warfare, a decisive punishment for invading Ukraine. The West believed it had deployed an unstoppable weapon, a financial nuclear bomb that would destroy the Russian economy and force Putin to retreat. But instead, something happened that almost nobody expected Russia didn't break. Instead, the global financial order did. When that announcement was made, world leaders celebrated. Headlines declared victory. Analysts predicted total collapse for the Russian ruble. Commentators on Western television assured viewers that Russia's economy would be reduced to rubble within weeks. Investors panicked, companies fled Russia, and global markets braced for disaster. And for a moment, it looked like the West was right. The ruble fell sharply. Thousands rushed to withdraw money from banks. Russia's stock market froze to prevent total freefall. There was chaos in the streets, panic in the news cycle, triumph in the West. But while Western governments were celebrating, something much bigger was taking shape. Something the architects of the sanctions never saw coming. A reaction that would permanently transform the global financial landscape. Russia stabilized, the ruble rebounded, trade resumed, and the world quietly realized a terrifying truth. If the United States and Europe could cut Russia out of the global financial system overnight, they could do it to anyone. Any country, any government, any economy. For decades, the United States enjoyed unrivaled financial dominance because the world trusted the dollar. It was considered neutral, safe, untouchable, an asset protected from geopolitical risk. But that illusion shattered the moment $300 billion of Russia's reserves were frozen with a single executive order. In that instant, every finance minister, every central banker, every world leader watching understood the message: your money is only yours if Washington allows it. And from that point on, the countdown began. Countries that had quietly relied on the dollar for generations suddenly saw their own future in Russia's crisis. Imagine being a leader in Saudi Arabia, India, Brazil, China, or Turkey, countries that might one day disagree with U.S. policy. The question that kept them awake at night was simple. If they can do it to Russia, what stops them from doing it to us? The answer was clear: nothing. That realization triggered the biggest financial realignment in modern history. Russia began accelerating alternative payment systems. China expanded its cross-border settlement network. India renegotiated trade deals. Middle Eastern economies began accepting currencies other than dollars for energy exports. Central banks around the world began aggressively buying gold. And dozens of countries that had never before questioned the dollar started preparing for a world without it. And that's the real story. The sanctions didn't break Russia. They broke the global trust that supported American financial dominance. For the first time since World War II, countries began openly moving away from the dollar, not because they wanted to, but because they believed they had no choice. The United States thought it was punishing an enemy. Instead, it frightened its own allies. And that's when the dominoes began to fall. China and Russia deepened their financial cooperation. Oil sellers like Saudi Arabia and the UAE began settling transactions outside the dollar system. BRICS, once considered a symbolic group, transformed into a serious economic alliance, now representing nearly half of global population and more than 1/3 of world GDP. Their objective is no longer theoretical. They are openly building a new financial structure to compete with the US-led order. And it all started with a decision that Washington believed would prove the strength of the Western system. Instead, it exposed its greatest weakness. Because the moment America weaponized the dollar, it stopped being neutral, it stopped being safe, and it stopped being trusted. The dollar is still the world's dominant currency, yes, but dominance without trust is temporary. And the clock started ticking the moment Russia was removed from the global financial network. What most people don't realize is that financial dominance rarely collapses overnight. It erodes slowly, and then it breaks suddenly. Just like a dam, pressure builds quietly until the moment it snaps. And right now, pressure is building faster than ever before. For decades, the dollar's power rested on a simple assumption. There were no alternatives. But today, alternatives not only exist, they are growing at record speed. And the more the United States uses financial power as a weapon, the faster those alternatives expand. And here's the part that should terrify every American policymaker. The United States cannot reverse this. Trust, once broken, doesn't return. The world saw the weapon in action, and they have already started building defenses. The irony is brutal. The United States believed it was demonstrating strength. Instead, it revealed vulnerability. The STGOFT cutoff was meant to cripple Russia. Instead, it crippled the foundation of American financial supremacy. The dollar's collapse didn't begin with an economic crash, a war, or a debt crisis. It began the moment the world realized the dollar was no longer neutral. That's when nations started preparing for the end of U.S. currency dominance. And now, that shift is accelerating faster than anyone expected. Soon, historians will look back at that decision and say that was the moment everything changed. The moment the world stopped depending on the dollar and started preparing to live without it. The turning point no one recognized in real time. And the scariest part, we're only at the beginning, because the real consequences are still ahead. The world is rearranging itself, alliances are shifting, and America's greatest weapon has become the trigger of its own decline. And now, there's no going back. The world didn't pivot away from the dollar overnight. The shift began quietly, behind closed doors, in meetings without cameras, away from microphones and headlines. But now, 2 years later, the consequences are visible everywhere. Trade routes rewritten, alliances redrawn, financial systems rebuilt, and global power recalibrated. After the STGOFT cutoff, Russia did something the West never believed possible. It proved you can be disconnected from the dollar-based financial network and not only survive, but transform. When the sanctions hit, Moscow didn't sit still. They reacted with speed and precision that shocked international observers. The Russian central bank hiked interest rates to 20% overnight. Capital controls were implemented. Mandatory conversion policies protected the ruble. And perhaps most significantly, Russia demanded that European nations pay for natural gas not in dollars or euros, but in rubles. And suddenly, the currency that Western governments promised would collapse rose higher than before the war began. The ruble became the best performing currency of the year. The narrative flipped. The West waited for economic collapse. Instead, the opposite happened. Russia adapted, reassigned trade partners, and emerged more financially independent than at any point in its modern history. But the real earthquake wasn't Russia's recovery. It was the message sent to every government watching. The U.S.-controlled financial system is no longer a guarantee of safety. It is a vulnerability. That realization triggered a global chain reaction, unlike anything seen in the modern economic era. China, already preparing for a world less dependent on the United States, accelerated development of the CPS settlement network, its alternative to STGOFT. Trade between Russia and China became almost entirely de-dollarized. Instead of settling in dollars, both nations shifted to yuan and rubles. In 2023, bilateral trade between the two countries hit record highs, and most of it was settled outside the Western banking structure. Then came India, a country traditionally aligned with both East and West, now seen as a rising global power in its own right. India refused to follow Western pressure to cut ties with Russia. Instead, it began purchasing Russian energy in rupees, a move that would have been unthinkable just years earlier. This signaled something unprecedented. A nation of 1.4 billion people was directly challenging dollar supremacy, openly, proudly, and without fear of repercussions. Meanwhile, the Middle East, the region that built the foundation of dollar dominance through the oil for dollar arrangement, began shifting. Saudi Arabia, the central pillar of the petrodollar system established in the 1970s, did the unthinkable. It announced it would accept yuan for oil sales to China. This decision struck at the heart of America's global power. For half a century, the United States maintained dominance because energy, the lifeblood of global industry, was priced in dollars. The system was simple and brilliant. If you needed energy, you needed dollars. Now, for the first time in modern history, that rule has been broken. Once Saudi Arabia opened the door to non-dollar oil sales, others followed. The United Arab Emirates, Iran, Brazil, and even U.S. allies like Egypt began shifting trade into local currencies. What once seemed impossible became a wave that could not be stopped. And while Washington insisted publicly that the dollar remained untouchable, the data told a different story. Central banks around the world started dumping U.S. treasuries and converting reserves into gold faster than at any time in the past 50 years. Nations that once stored wealth in New York banks started moving assets into Shanghai, Dubai, and Singapore. In 3 consecutive years, global gold purchasing hit historic highs, signaling a worldwide abandonment of dollar dependency. But the biggest blow came from a coalition that was once barely acknowledged by Western analysts' press. What began as a loose grouping of developing economies, Brazil, Russia, India, China, and South Africa, transformed practically overnight into the largest coordinated challenge to Western financial supremacy in a century. And after the STGOFT cutoff, their mission changed. They were no longer just cooperating, they were building a new global financial order. BRICS expanded. The inclusion of Saudi Arabia, the UAE, Iran, Egypt, and Ethiopia sent shockwaves through economic markets. Suddenly, this alliance controlled nearly half of humanity, more oil reserves than OPEC, and a larger GDP than the G7 when measured by purchasing power parity. Their leaders didn't hide their ambition. They announced development of a common settlement framework for international trade, a new cross-border payment system, and even discussions for a currency backed not by debt, but by commodities like gold, oil, and rare minerals. A currency backed by real assets, not printing presses. The exact opposite of the US dollar. That idea alone shook financial markets because it threatened the unspoken truth. The foundation of the modern dollar is trust, not tangibility. And trust is exactly what evaporated when the US froze Russia's reserves. The BRICS plan doesn't need to replace the dollar outright. It only needs to weaken demand. It only needs to become an alternative. Because once an alternative exists, dominance is no longer dominance. It's competition. And competition is something the dollar has not faced in 80 years. Western commentators dismissed the BRICS currency idea as unrealistic, naive, or symbolic. But the same experts dismissed the possibility of Russia surviving the sanctions. They dismissed the idea that Saudi Arabia would sell oil in yuan. They dismissed the acceleration of gold accumulation. They dismissed the explosive rise in non-dollar trade settlements. And now, quietly but undeniably, the numbers are telling the story loud enough that no one can ignore them anymore. Dollar share of global reserves is falling faster than at any point in history. International trade settled in dollars is shrinking. SCUBUFT is losing relevance. CIPES is scaling exponentially. Gold reserves are growing globally like a silent rebellion. And countries once firmly within the American sphere of influence are hedging their bets, preparing for a future where dependence on the United States is dangerous, not strategic. Behind closed doors, governments are discussing what they once feared to even whisper out loud, preparing for life beyond the dollar system. Old alliances are cracking. A new world is forming in real time, because cutting Russia from SCUBUFT didn't isolate Russia. It isolated the United States. It exposed something no one was supposed to see: US. Power rests not on military strength, not on technology, not on political ideals, but on the dollar. And by weaponizing it, America triggered the very process that will eventually dismantle its own dominance. The world watched, learned, and acted. And now momentum is irreversible. The system that ruled the world for 8 decades is cracking. Countries are walking away from the dollar not because they dislike America, but because they fear being controlled by it. And now, for the first time in generations, the financial future belongs not to one empire, but to many powers rising at once. A shift that was unimaginable has become unstoppable, and the consequences will reshape everything, from global markets to national currencies, from energy pricing to political alliances, from everyday prices to the balance of global power. The storm has already begun, and the collapse is no longer theory. It is happening right now. The most dangerous assumption in geopolitics is believing that power is permanent. America believed that the dollar's dominance was eternal, that no nation would ever dare challenge it, that the global financial system built after World War II would last forever simply because it always had. But history doesn't work that way. Empires fall not when they are weak, but when they believe they cannot fall. And now, whether Washington admits it or not, the world has entered the final chapter of the dollar-led financial era. Not in the distant future, not in theory, but right now, unfolding in real time. The tipping point has already been crossed. Countries have already shifted. The system has already fractured. The dollar will not disappear tomorrow, or next year, or suddenly collapse like a crashed stock market. That's not how reserve currencies die. They die slowly at first, then all at once. They die through erosion, one trade deal at a time, one reserve reallocation at a time, one broken alliance at a time, until one day the world looks around and realizes the old structure is gone. Right now we are deep into the erosion phase. The collapse phase is coming next. The world is changing because countries have learned something they can never unlearn. The US dollar is not neutral. It is not untouchable. And it is not safe if your national survival depends on it. The moment the US froze another nation's sovereign reserves, the game fundamentally changed. That action was not reversible. It cannot be undone, and it will be studied for centuries as the turning point that transformed the global economy. Because every central bank now wakes up each morning asking one question they never had to ask before: what if we're next? That single question reshaped global finance more aggressively than war, diplomacy, or trade negotiations ever could. And here's the truth that few Americans understand: the power of the US dollar allowed the United States to play by different rules than everyone else. The US could print money without consequence. It could run deficits without limits. It could borrow endlessly because the world desperately needed dollars. It could sanction adversaries without firing a shot. It could finance the world's largest military without worrying about how to pay for it. Its citizens enjoyed cheaper goods artificially low inflation, and living standards far above what the real economy justified. All of that was built on one pillar: global demand for dollars. But when demand falls, everything built on it falls too. And that is the next phase, one the US is not prepared for. As more countries diversify away from dollars, demand decreases. As demand decreases, the US loses its ability to fund its government simply through printing and borrowing. Interest rates rise. Debt becomes more expensive. Inflation becomes permanent. The cost of living rises far beyond wages. Imports become unaffordable. The US standard of living declines, not due to recession, but due to mathematical reality. The American people are not ready for that world. They have never known it. They have never lived without dollar privilege. They have never experienced what happens when the world stops financing their lifestyle. But around the globe, nations are preparing for exactly that world. They are building currency swap agreements. They are establishing direct payment links. They are pricing energy in multiple currencies. They are accumulating gold as a weapon against financial instability. They are strengthening trade blocs outside Western control. They are designing a future without American permission. For decades, countries were afraid to challenge the dollar. Now, they are afraid not to. That is the irreversible consequence no one in Washington thought about the night they celebrated cutting Russia off from CBDIFT. Because when the financial weapon was used, the illusion of neutrality died, and once an illusion dies, it never returns. Now, a new reality is forming, a multipolar currency world where financial power is distributed, not concentrated, a world where the dollar is one currency among many, not the king of all. A world where the United States must negotiate instead of dictate. Some countries will rise in this transition. Others will fall. But one thing is certain: the age of unchallenged American dominance is ending. So who wins in the new world? China wins, not through war, but through patience. While the United States spent decades using sanctions as a weapon, China spent decades building alternatives. Factories, infrastructure, shipping lanes, digital payment systems, commodity reserves, global investment networks. China built a world ready to function without the dollar. Now, as the dollar weakens, the yuan strengthens, slowly, strategically, deliberately. Russia wins because it proved the unthinkable: you can survive without the dollar system. You can survive without CBDIFT. You can survive sanctions from the world's most powerful nations. Russia shattered the mythology of Western financial invincibility. The BRICS nations win because they finally have leverage, unity, and a shared purpose. They are no longer passengers in a Western-led system. They are architects of a new one. The Middle East wins because, for the first time since oil was discovered, it controls the terms, not Washington. Gold wins because trust always returns to tangible value when fiat systems fail. Alternative payment systems win because they bring competition to a space where none existed. And who loses? The United States loses the most. Not because it is weak, but because it relied too heavily on strength. When your power depends on the world needing you, you cannot afford to threaten them. But America did exactly that. Europe loses because it tied itself to a sinking ship. It followed US policy blindly, even at its own economic cost, and now finds itself economically dependent on rivals. Ordinary Americans lose because they will pay the price of decisions made by leaders who never imagined consequences. When the dollar weakens, imports rise, savings shrink, debt becomes unbearable, and the system ordinary people rely on collapses from the inside. And CBDIFT, the system at the center of all of this, becomes a relic of the era when a single financial network controlled the world. It won't disappear, but it will become just another option, no longer a weapon of empire. The turning point has already passed. The fuse has already been lit. The world is not moving away from the dollar. It has moved. What remains now is momentum, acceleration, inevitability. Historians will look back at February 2022 the way we look back at 1914, the year Britain weaponized finance and began the slow death of the pound. They will say that the United States, confident in its absolute power, pulled the trigger on its own decline, not through invasion, not through defeat, but through policy, through arrogance, through the belief that power could be enforced instead of earned. And they will say the same sentence every empire eventually earns. They fell because they believed they couldn't. The world has changed forever. The dollar's collapse has already begun, and there is no going back. The question now is not whether the dollar will lose dominance. The question is how fast. 10 years. Maybe sooner. The data says acceleration, not stability, and the next shock. The moment when markets finally realize what has already happened will hit like lightning. Because financial revolutions don't announce themselves. They arrive suddenly, after years of silence. And we are standing in the silence right now.